Hello, today I'll be going over the three statements projection model. And the whole concept behind this model, when you use it, is to figure out future income for a company before you invest in it, because you need a certain amount of return that you require before you invest in the company. And after we finish this three statements projection model, you'll be able to calculate the IRR, or the internal rate of return. And if your IRR is higher than your targeted IRR, you would invest. But if not, you will not invest. So the first thing you need for a company that you're evaluating to make this model is the three statements, which are the income statement, you need the balance sheet, and you would also need the cash flow statement. And you need the 3 or 4 historical years. So the latest historical periods for those three statements of the company that you're evaluating. Here we have 2011, 2012, 2013, and 2014. And I'm going to start with the total revenue and the cost of goods sales as a percentage of revenue, and the research and development as a percentage of revenue, sales and marketing as a percentage of revenue, and the general and administrative as a percentage of revenue. And I'm simply going to take averages of all of these. And if you wanted to get more detail, you would have to read the company's financial statements and investor presentations, the 10K and the 10Q, the quarterly reports that a company issues, and just read about the company, like what are their future endeavors, or they're planning on expanding, or they planning on dissolving certain parts of the business, or whatever their future decisions are. And I'm just taking simple averages, as I mentioned earlier, and I will use these numbers to calculate the future projections for the income statement that's further down in my model. And this is the starting point. I'm almost done here. I'm just gonna copy all of this, the formulas that I have here, over. And this is the annual margin improvement, just the previous minus the current. Now that we have all of these metrics here, we can go down and start filling out the income statement. So this is just a simple growth rate formula that I put here. For the revenue, it's the previous amount times 1 plus the growth rate. I'm gonna copy that formula over also. All right, I'm gonna start with revenue here. And here, that's what all of the formulas were for, to calculate everything here. This is a simple growth rate formula. I'm just going to copy this over. And the cost of sales is a metric as a percentage of revenue, so I have to take that number and multiply it by revenue. I'm going to copy this formula over also. And to check To make sure everything is copied over correctly, you can just click on one of them. You can double click and it'll highlight the numbers that included in that formula. So I'm gonna leave that there. Everything looks correct. For the gross profit, I can just calculate from the sheet here. Take the revenue minus cost of goods sold, or cost of sales as it's labeled here. I'm gonna copy that over. For the R&D, just a simple metric here as a percentage of revenue. So all I do is take that number and multiply it by revenue. For the sales and marketing expense, same concept. It's a percentage of revenue also. As you can see, it's a lot of back and forth, but it's well worth it in the end. And the general and administrative expenses, it's also a metric as a percentage of the revenue. I'm going to copy all these formulas over. Copy the sum over also. I'm going to wait to come back to do the depreciation and amortization. Also, I have to come back and calculate the EBITDA at the end. So right now, I'm just calculating the EBIT. That's earnings before interest and taxes. And all I take is my gross profit, subtracted by my total operating expenses here. And that's just the operating margin here, where you take the total EBIT here and divide it by revenue. I'm just going to copy both of those over. The financing costs, I'm just going to assume is 0. Following the trend from here. And the profit before income tax is simply the EBIT, because I don't have any financing costs here. And the income tax expense is the profit before income tax times my tax rate here, which is 30%. I'm gonna lock this number using F4 before I need to use a negative sign in my formula. I just put it here. I'm gonna copy both of these over. And my profit loss for the period would be income before taxes minus, will it be a plus here since it's already negative? Will it be plus this here? Then my tax rate is 30%. I can just copy that from over here. Now I'm just copying this formula over. And the EBITDA, as I mentioned earlier, is only the EBIT plus D&A. So I take my EBIT from here and I add it to my D&A. You always use D&A from the income statement, the cash flow statement, excuse me, because Sometimes company can include the DNA within other line items, so it'll be different on the income statement, and they have to separate everything and make sure they put the correct numbers in the cash flow statement. So you always use the DNA from the cash flow statement. I'm going to copy this number over. And now we're to the balance sheet. And I had to go up and calculate a couple metrics before we fill out the balance sheet and cash flow statement. So I'm going to use the same method as I did earlier by taking the averages. We're going to continue that theme throughout the rest of this presentation. And I'm not just I'm going to copy these over. And all I'm doing is just taking the averages of all of the previous periods and copying the formula over. As you see, it can be really time consuming. Right here, I'm just copying the formulas down just to show you how that works. It's a lot faster. Just, you know how you copy and paste, you can copy and paste formulas also. That's what I'm doing here. And this is just 0. I can copy that over. And here, just gonna copy the same amount over. Same for here. I'm almost finished here. We can go down and start filling out the balance sheet. All right, let's go to the balance sheet now. And before I go to the balance sheet, I'm gonna go to my income statement, get my net income, projected net income, and put it for the top line item for my cash flow. statement here. I'm going back to the top and start in. We don't fill out the cash and cash equivalents line because they're what we are calculating and solving for in the cash flow statement here. After you finish everything from the cash flow statement, you receive your end cash, and that goes in the first line of the balance sheet. So the only thing I'm doing now is starting at accounts receivables and using my metric to calculate the projected years for this line item, which is accounts receivables. So I go up, take my accounts receivable as a percentage of revenue and multiply it by revenue. For the inventories, same concept. Go up, take my inventory as a percentage of COGS, cost of goods sold, and I multiply it by the cost of goods sold here, which is cost of sales actually here. I'm gonna copy these formulas across. And now it's time to move on to the liabilities and equity side for the accounts payable, accrued expenses, and deferred revenues. First, I'm gonna start with my accounts payables. And this metric here, I'm going to multiply it times the operating expenses here. For the accrued expenses, I'm going to do the same thing. And this is a percentage of the operating expenses also. For the deferred revenues, it's a percentage of revenues. So go up and get my metric. Multiply it by the revenue for that period. And for the non-current assets, I'm just going to assume this stays flat. And also for the non-current liabilities, I'm going to also assume that that stays flat. Carry that out through the periods. For right now, that's all that I could do for the balance sheet. So now we're going to move on. Remember, I got my first line item for the cash flow statements from the last line of the income statement, which was the net income. Now we can do the depreciation and amortization. Okay, solve for this. And it's a percentage of revenue. I'm gonna carry that over. Remember up top in the income statement, I said I'll come back to it. I'm going to do that now. I'm going to copy all of the depreciation and amortization line item for the projected years and move it up top to the DNA on the income statement here. Okay, and now it should calculate the EBITDA, the earnings before interest, taxes, depreciation, and amortization. Okay. And now for the stock-based compensation. I'll take this number. That's a percentage of the operating expenses. So I'm going to get that from here. I'm going to copy that over. For the deferred income taxes. I'm going to go up, get that metric. Multiply it by the total income taxes, which is here. And that needs to be a positive number, so I'm going to flip this sign here. Put a negative in front of it. I'm going to copy this number over. Now to my next section, I need to get the other investing activities as a percentage of revenue. So I need to go down here, find the other investing activities. And that's in the investing activity section of the cash flow statement. That's a percentage of revenue, so I multiply it by the revenue. I have the exchange rate fluctuations. That's a percentage of revenue also. I'm going to carry both of these numbers across for the projected years. I have one more metric up there, which is the equity issue. Remember, it stayed flat, but still I'm going to link to it. Okay, I have all my metrics listed there. And I'm going to stay on the cash flow side. And I need to link everything from the balance sheet to the cash flow statement and everything from the cash flow statement to the balance sheet. Everything should be linked. Each item on the balance sheet should be linked to something on the cash flow statement and vice versa. And it should be represented only one time. So whenever you are on the asset side of a balance sheet, you would need to subtract the previous number from the current number to arrive at the number here on the cash flow statement. And whenever you are linking to the liabilities and equity side, you would need to add. So you can take the current period and subtract the previous period. So let's get started here. We need the accounts receivable. So what I can do is take the previous period line item amount minus the current period line item amount. I'm going to do the same for inventories here. Previous minus current. And what I'm going to do now is highlight all the items that are linked. I'm actually going to highlight the background. I'm going to fill it yellow for caution. This will help a lot if you get to the end of the model and you're not balancing on your balance statement. It can help you a lot to see what you already linked. And now it's time to go to the accounts payable. And now you'll do the opposite, because it's on the liabilities and equity side. You will subtract the current minus the previous period. This formula should copy down because all of these are listed right after one another. The accrued and the deferred revenue. And I'm going to click on it to make sure it copy right. That's right. Do the same for the next line item, which is deferred revenues. Copy right. Highlight all of these. Highlight these also. Now the other changes next. We have two line items that would affect this. We have one on the asset side, and we have one on the liability side. So we'll use the same format. We'll take the previous minus the current. We'll add it to the liability side line item. We'll take the current minus the previous. 0 there. And I can copy all these formulas across. And I can sum all of these now. Make sure that I highlight these. All right. Now let me make sure that these are linked also. I can take my net profit. Some of these will go into the same line item, so you have to be careful and to do that when you're doing stuff like that, because for example, the equity item is net income, stock-based compensation, the change in exchange rates, the difference, and you have also the new equity. So I'm just gonna start from the top and finish working my way down. So for the net income, it will go on the equity line item. Since it's on the equity side, you will take the previous number, and you add on this side. So you'll add the net income. I'm gonna leave it like there for now, and come back and add the additional ones when I come to it. Then you had the depreciation. This will go into the PP&E. So here, since on the asset side, I'll be subtracting. Take this number, which is the previous period, subtract the DNA. I'm gonna highlight DNA because I already accounted for it on the balance sheet side. For the stock-based compensation, as I mentioned earlier, this will go into the equity. So add, since I'm on the liabilities and equity side, I'm gonna highlight that for I can know it's been accounted for. And for the deferred income taxes, I'm gonna go up and find where that's supposed to go. I'm gonna go here, and it's on the liability side, so I add. I'm gonna highlight this. And now we're down to properly planning equipment and other investing activities. Let me check the top of my metrics to make sure. Okay, look like I made a mistake earlier. I'm supposed to take my PP&E from here. Multiply it by revenue. Need to make that a negative. And now I will bring this number to here. This isn't going from the asset side. I will take my previous number, subtract, . this number and also subtract DNA. And I had to go back and figure out what I did with DNA previously because it'll throw everything off. And I think I just subtracted this time of DNA, so I know what I did, so it should be okay now. And I'm gonna use the precedings to see what was happened before this. Okay, I'm gonna check the dependence also. This shows me what depends on my number. Okay, everything looks okay there. Some other changes. That linked in already from the 8.1 and the 4.1 there. Okay, and the PPE. Use the trace formula again to make sure I got this right because I messed it up a little earlier. Okay. So I already used it, so I can highlight this, remove those arrows. For the other investing activities, okay, I didn't use this yet, so link that to here. And since it's an asset, I'm taking my old number, subtracting the new number. I like this because I used it already. Go ahead and sum these numbers. With a new equity issue that goes into the equity line item. I'm just checking my dependence and proceedings there. Everything looks fine. I can take that off. Just add this number, which is 0, to my equity line item here. And I add it since it's on the equity side. And I see one more that I can add while I'm here. That's the effect of exchange rate fluctuations. I'll go ahead and highlight this number because it's linked to everything. Go ahead and highlight the two that I use here. And I already have these numbers calculated here. I was just checking to see the ending cash of the previous year should be the beginning cash, and the change in cash should be everything up top. So let's see if everything is highlighted here. Have cash provided by operating activities plus cash used in investing activities plus net cash provided by financing activities and effect of exchange rate fluctuations. That's correct. Everything is right. I'm going to take my ending cash and put that as the cash in my balance sheet up top here. And now the fun part is seeing if everything balances. So that's my total current assets. Now it's the total non-current assets and your total assets. Just gonna check to make sure everything is summing up that's supposed to sum. And the same for the liabilities and equity side. And it's good to check because I just found a mistake there. The formula didn't copy over just the number. So I need the current liabilities here. I'm going to sum up my non-current liabilities here. Bring my equity across there. Now I have a formula to check if everything is okay, and it's not, and everything don't balance now because as you see here, I have the total assets minus the total liabilities and equity there, and it don't sum up. So equity, total liabilities, okay. Total liabilities there. see that I'm off by. And let's see, equity size. So I'm supposed to add stock-based compensation. Exchange rates. Okay. Okay. 131. Checking to make sure my cash copied over correctly. I know there was an issue with the PP&E, so I'm gonna check that out now. So I had a previous number minus I think that's wrong there. I have stock-based compensation included in my PP&E. It should just be the depreciation and CapEx. So let me see which one of those do I have. I had a CapEx. I need to get the depreciation. And that's what it was. I included the stock-based compensation within my PP&E, which only should include the previous amount, the CapEx, and the D&A. And I'm just gonna go up here and copy everything over because everything should be okay now. What else did I change earlier? Let me go up here and just check manually. I had a previous PP&E minus the depreciation minus the CapEx. Okay. And what else did I change earlier? Let me check on the PP&E. Check on the stock-based compensation. See what all this linked to for these other numbers. Check the depreciation. So what I'm gonna do now is go to my formulas. Trace the dependence. PP&E. EBITDA. Okay. Compare it to these. Trace dependence. Okay. Remove arrows. Now I'm going to check stock-based compensation. Do the same thing. Looks cool. Move everything. What I'm gonna do now. And Control R to copy the formulas over. The same thing here. Item by item. Okay, this was wrong here. See how these numbers are the same here? This is one of the things that are wrong. Set to take my last ending cash here. It's probably not all of it, but this probably a good chunk of what's wrong. And there we go. We're balancing out the whole time. The two mistakes that I had were the cash didn't copy over correctly, so I had to go back and fix it. And my PP&E included stock-based compensation. So there we have it. Sorry for the long video, but that's how you link the three statements. And thanks for watching. And actually, you got a good deal today because you see how you can go back and correct and play around with the model if you're wrong, and all the nuances that's incorporated with building the model. So thanks for watching and stay tuned.